I'm Colm Lyon. I'm the founder and the CEO at Fire, which is an embedded payments business. I'm also the head of a family office which makes early stage investments and invests in VC funds in the fintech and payment space. And then I represent the industry on some different industry bodies, including the UK Finance Payments Products and Services Board. Fire Financial Services is a regulated business. It's regulated in the UK and Ireland since 2010, and we support about 1,500 businesses to help them, if you like, to automate and to streamline their payment process. So we make it easy for them to get paid. We make it cheap for them to be able to process payments in an automated way. Some of our customers might need thousands of accounts or thousands of debit cards because that's their particular business model. And what we do is we really deliver bespoke, customized solutions to our customers in the area of payment processing. So over the last decade or so, there's been a number of major trends, if you like, that have taken effect. And all of those trends have led to this new era of embedded payments, becoming the hot topic that it is today. And I think of those trends that are happening, there's three big reasons that I see. One is the regulation itself. So the regulation over the last number of years has changed. You would have seen examples in Europe where the Payment Services Directive came to fruition. And then also you've seen changes in the way in which the central banks throughout Europe and in the UK about 10 years ago, in fact, opened up access to what are called settlement accounts for non-bank financial service providers. So what does that mean? What that means is that businesses like Fire, which are non-banks, but they're called payment service providers, are able to access the payment systems in a way that they couldn't do up until that point. So that's the change in the regulation which has happened. In addition to the changes in the regulation, there's been changes also in the technology. And we all know that because we have it in our pocket, right? And we now all carry, maybe 1, 2, 3 bank accounts in our pocket. And therefore, when you think about that, you realize that you can pay from there perhaps without using your card. And the technology has leapfrogged forward to that point in time where you now have access. And from a business point of view, what it means is that businesses can also now get access to their account, perhaps without logging into the portal that's provided by the financial institution itself. So that technology shift has also opened up changes in the way in which people will consume the payment products. And finally, I'd say the third big trend that has emerged is that of changing expectations. So we all are consumed by instant messages, fast, short messages often too. And so business has gone a bit like that too, that we want to be able to consume things, and the need for, in particular, I think, instant payments and the ability to be able to send money as a business or as a person to somebody else, and for them to instantly receive that fund and to receive the notification that they have the funds as well. And in the case of a person, that might be to your phone, but in the case of a business, it could be an update to your ledger system. And when a business goes about trying to embed payments into its own systems, I think the first major challenge, if you like, that they see is that it's a change in the way in which they operate. So, and that's the big change really. It's not like, it's not really a technology challenge. It's more, I'm going to change the way in which I'm actually realizing when I'm paid and how I'm going to pay out. So we have to change. And what we see is those businesses, the obstacles will be around, I think, that they maybe can't get these services from their existing bank. So their existing bank maybe doesn't have, what we call an API. It doesn't have this ability to be able to integrate directly into the accounts that you have. They mightn't be able to open up 1,000 accounts in real time through an API. They might have to fill up forms, right? So businesses are faced with this dilemma that today they're kind of stuck in having to consume a product that maybe it functionally works, but they can't really access it in the manner in which they want. So I think for businesses, we see them trying to embed, is hence the word embedded payments, right? But they're trying to incorporate, if you like, the functionality of a third-party product into their own systems. And that makes complete sense these days because they want to automate, and they want to save money and they want to save time.